Yo, yo, yo! I love all this good energy and optimism. Welcome everybody back into Crypto's News. Thank you for making the time to join me live. And if you're watching this later on, I also appreciate it. Your support goes a long way towards the show. It goes to show me that you care so much about staying on top with what's going on in crypto for whatever reason. Maybe you don't even like crypto, like those people who are holding, what is it? They're holding an anti-crypto conference symposium in September. I don't know if you've heard about this. They're going to be bashing crypto. They're going to be talking about the perils of trusting these celebrities. So whether you're one of those people who is here just to find reasons to bash, or you're someone who was a hardcore hodler, like we have Dot Sab Gaming and Lifestyle, who is hodling hard his ADA Vet H bar, he's got his hash graph there. Damn, son. Whoever you are, I welcome you. I encourage you to go ahead and just sit back, enjoy the chat while we dive into some of the goings on and try to stay on top of what is going on with these markets and crypto overall, because as we all know, if you've been around long enough, this doesn't die. There's a beautiful anti-fragility that Bitcoin first started, and now is it's almost scary how some of these projects are anti-fragile and are unstoppable. Pandora's box has been opened, my friends, as we always say, but I'm here to have the journey with you guys. So thank you for partaking and joining me. I'm glad you liked the intro song, BT. I haven't changed it, and I think that's the first comment that I've gotten on the intro song, so I'm glad you appreciate it. So let's go ahead and start off. Yeah, I was gonna do a dumb joke. That's why I'm kind of wet here. I was gonna be like, did I finish my drink? Moment of truth. And then I was gonna test it and be like, oh, damn. I thought it was empty. And I thought it was empty before, and I've just ended up pouring sparkling water all over myself, because there's a beauty in that moment, like Schrodinger's cat. Before you know whether something is going to happen or not, whether the cat is dead or alive, as in Schrodinger's experiment. And it's kind of like crypto. We're sitting here at this no man's land. Let's take a look at the price. So we have Bitcoin up 3.2%. I really like doing the videos on the day that we're up, on the days that we're up. So not bad. We have Ethereum up 5.4%. So it's up 8% on the week. That's quite a nice rally. Previously, it's not as good as a rally as I had heard some of the bulls saying. Once we hit those lows of around 17,500, was it? I heard that we might get a nice bounce all the way up to $27,000 Bitcoin. Alas, we have not gotten there yet. But we also haven't really broken that much further south. During the lows of the day, we did break below 20,000, but we're back above that now. And let's take a look at what some of the trending coins are here. So trending, top gainers the last 24 hours. That's not hardcore. Hardcore is when you're seeing these coins go up 300%. That's bull market stuff. So you can tell we're in a bear market when the highest climbing coin is up only 11%, the Sandbox. Then you have Stepin, and then you have Thorchain. Those are the top three for the day, each up around 10%, not much more. Thorchain has been doing some great things actually when it comes to allowing for you to have swaps that wouldn't even require you to have some sort of intermediary token in between these swaps. Really something that Eric Voorhees of Shapeshift has been talking about as a major project for some time. So I think Thorchain could be one of the ones. He's one of the OGs that I genuinely do trust. So it could be one of the ones that would be worth looking at right now at this time, I would say. I believe Sandbox is one of those VR, NFT, virtual gaming tokens, whatever that is. Down the most are Terra Classic USD, Cosmos Hub, and Tether Gold. Down 9.1%, 3.1%, and 1.9% respectively. Welcome everybody joining. How's Vegas life going? I'm actually not in Vegas. I'm in Hollywood, although that might be changing due to market circumstances. We have to laugh through the pain. That's all we can do in the bear market. This one is hitting me particularly hard, but that's only for my own reasons. For example, with Celsius, man. I remember interviewing Alex Machinsky, and it was kind of interesting, the head of Celsius, and he would kind of talk about his biggest selling point was talking about how much in rewards they had paid out to users, which is just so funny that we're still getting paid out rewards that we may never be able to withdraw. Like we discussed yesterday. I think it's kind of laughable, but yeah, I think it's kind of out of touch a little bit when I don't know. I don't know. It's just odd to me. But yeah, that was my mistake in staying in there a little bit too long and trying to get greedy by chasing those yields. And there are others still chasing those that greed, that dragon in other places. So definitely be wary, since who knows if we've seen the bottom here. This is, for the most part, just what I've been talking about over the last sessions, which is these triangles that have repeated themselves. But of note is that these triangles are getting smaller. So maybe the drops will get smaller as well. So we could be getting closer to a bottom here if we have not already. This next target, according to this chart here by L Crypto Prof, will take us down to around 14,000 to 16,000 kind of region is what I'm hearing. So that could be coming up shortly as we reach the penultimate region here of this latest triangle. But of course, I think we have to look at the macro picture. I like to follow Real Vision, that YouTube channel. I really like this Darren dude. Is that his name? Darren Phillips, I think, is it? And he comes on and he is just one of the top voices when it comes to understanding the macro picture. He really doesn't think that it's over here for risk assets, although we are seeing, again, just a little bit of a reprieve from it. Trade carefully, my friends. There are those who are saying they're happy with what they have right now. They're not going to get wrecked if we go down to 12K Bitcoin. That's really where it should be. You shouldn't be betting. You shouldn't be mortgaging your house or anything to try to pick up Bitcoin here assuming that this is the bottom for any sort of reason. Yeah, we're going to be discussing Voyager. I think that's the big story of the day for sure, BT. So Solana Labs has been sued. Solana is one of the tokens that has been seen as an Ethereum killer, potential Ethereum killer, alongside others like Polkadot, Avalanche. But Solana has been one of the big ones that has been called SQL Lana, so database Lana, because of how perhaps centralized it is, because they can just stop the blockchain and start it right up again. But anyway, Solana is being sued. Well, a lot of entities involved with Solana. So you have Solana Foundation, Solana Labs, you have Solana's Anatoly Yakovenko, you have the crypto VC giant Multicoin Capital being sued, you have Multicoin's Kyle Samani personally being sued, and you have trading desk So OTC trading desk Falcon X also being sued. Apparently, it's not a registered security. Boo-hoo. So another. I mean, this is the most annoying kind of lawsuit to me. It's like, regulators, come save us. Yeah, I bought this token in 2021, says Mark Young, and it is an unregistered security because it definitely passes 3.3 tenets of the Howey test, which is a Supreme Court precedent commonly used to determine whether something is a security or not, and whether it should be sued by the Securities and Exchange Commission or not here in the United States to protect the users. But anyway, purchasers who bought Sol securities have invested money or given valuable services to a common enterprise. Common enterprise. That's one of the things, right? To be a security, it has to be an investment in a common enterprise. They have to invest with reasonable expectation of profit based upon the efforts of a promoter. So you have the promoters being Solana Labs, Solana Foundation. You also have Multicoin being one of the promoters out here because they were heavily invested in the Solana ecosystem and took advantage of this to promote Solana, say that it was great, throw some money into it, and offloaded millions of dollars worth of SOL onto retail after this relentless promotion that was taking place. And most of this selling took place through not necessarily public exchanges like the Binances and Bitrixes of the world, but on these over-the-counter desks that are usually reserved for the big whales to dump on others. So here you go, Falcon X being sued. Anyway, I don't know where this is going to go. This doesn't look like the firm lawsuit, the first lawsuit by Mark Young, who is suing this class action lawsuit out of California. So the law firm that's doing this is Roach Friedman, who have also recently filed suit against Binance for allegedly misleading investors during this Terra explosion, the stablecoin project that recently exploded, losing its peg and breaking down a lot of the ecosystem. I mean, so much was tied together and tied to this Three Arrows Capital company that we're hearing a lot about, and how they're going down has caused wreckage and destruction that we are going to continue, I'm sure, talk about as the shows go on. Solana network has stopped like 7 times. I stopped keeping track, honestly. It was already laughable to me after the first or second time when something is claiming to be decentralized. Yeah, we've seen it happen with others like IOTA, but it just continued to happen. I just didn't see the point in even laughing at it anymore. And I don't understand how you could look at this whole space, which is really on investment, on decentralization of money, decentralization away from middlemen who are extorting. We have so much still going on, and a lot of this has to do with investors who haven't taken time to do any diligence, but besides asking, hey, is this going to go up 50x, 100x during this next quarter? Will this investment stand the test of time? Is it something that's actually durable? Is it something that will take away power from the middleman? And so in not doing so, they've given a lot of credence to projects that haven't done well by this space, but we've learned a lot, of course. Anyway, just what's going on with mining. So you have this company, Riot Blockchain, that is moving from New York to Texas, which is interesting because Texas power just hit its record high for June because of over 100 degrees that we're seeing right now for power. So I don't know if that's going to be the best move. Hopefully they're mining mostly Bitcoin at this time, since you're not going to be able to mine Ethereum when the merge in fact happens very soon. But I thought it was of note that you have someone that's trying to move away again from New York. Why were they in New York in the first place? At least New York gets cool sometime for a lot of the time. But right now they're going to have to be facing these steep temperature that's taking place in Texas. The name of the new facility is going to be, the name of the old facility was called CoinMint, and it was in Masana, New York. Yeah. So yeah, it looks like Bitcoin is planning to ship its S19 miner fleet to Texas in July. So Ethereum hash rate has been going down. Some are saying, hey, you guys can't even see this, can you? Let me see. Let me zoom in a little bit here. There you go. So if you can look over the recent time, we have seen that the hash rate has dropped by about 20% from, 1.1266 to petabytes, whatever the heck it is, down to 915.8147 terahashes. So A lot of this is perhaps in preparation for the merge where Ethereum is going to move away from proof of work and there will no longer be issuance of blockchain rewards to miners. It's going to be to GPU miners or even ASIC miners. I understand that there even are these application specific integrated circuit miners that exist for Ethereum now, which is interesting. So they're specifically made for mining Ethereum. Those are probably going to have to be completely bricked when the merge does happen. But yeah, it looks like a lot of these GPUs may already be hitting the market, and we'll see if they continue to hit the market as we hit the merge. So some are expecting that there's going to be a lot cheaper prices when it comes to graphics cards coming up very soon. And Bitcoin does seem to have a very volatile hash rate, but it hasn't really dropped off significantly considering its volatility off the highs. I fully expect that both hash rates will recover, especially here for Bitcoin. Not really too scared. But today was a monumental day for, I would say, for Ethereum. It had the second testnet before the merge take place successfully. So a fork of the Sepolia testnet, which successfully forked to the merge. So this is great. This is the second one following the Ropsten testnet. And the last one is going to be taking place next, which is the Goerli testnet. These were the three that had to take place before the official main network of Ethereum moves to the merge, which is expected to bring huge reductions in issuance of Ethereum. Basically, those who are going to be issued Ethereum are receiving it under the proof of stake model. And the proof of stake model will now not allow for withdrawals for some time. Some speculating 6 to 12 months after the merge takes place before you will be able to actually withdraw. And even so, there will be a line to be able to withdraw. So you could have a real supply crunch for Ethereum, which is still in demand for NFTs and still in demand for all sorts of other things. I heard some interesting discussion today about on ETH Finance, on rETH Finance, on the subreddit, about layer 2s potentially eating into the profits of layer 1, and whether the adoption of layer 2s will cause problems really for the price of Ethereum because of demand plummeting. But I thought it was an interesting discussion to get into, but right now we just don't see a massive adoption yet of layer 2. And my own interpretation of that is not just simply because they're not decentralized enough or really scalable enough just yet. But I think a lot of it has to do with friction. I think the less clicks, the easier the UI. I mean, that's why we've had a lot of flocking to Solana, for example, is because the UI and the user experience is cleaner and perhaps easier and simpler. People don't want to have to think so much and don't want to have to pay as many fees in different directions to move. And they want to be able to access as many tools, right? You have kind of these silos that can take place when you move to layer 2s, where you might have applications that live on this layer 2 but not that one. They haven't adopted there yet. There might not be bridges between them just yet. So it's still very early in the tooling for layer 2 and the ecosystem around that. So I just don't really see any sort of problem for layer 1 just yet. Besides, we want to see lower fees. I think for the most part we want to see Ethereum be adopted, or other blockchains. We do want to see lower fees. It's not that we want people to be paying higher fees. It's just that high fees are an example of just how in demand block space really is. I want my transaction to be included in the next block or any block, right? And I'm willing to pay a fee for that. That goes to show that there's a real utility for a blockchain. That's something you want to see for blockchains. Not necessarily lower fees or even free fees that could lead to, example, to spam attacks or Sybil attacks, pointless transactions be included that have to be mined and wasting precious electricity for no reason. Just to give some food for thought here in case you hadn't thought about some of those concepts in the past. Hey, what's going on, everyone? I'm sorry if I haven't had much time to entertain the chat, but we're just moving along here with the news, trying to provide you guys value. Nodula and Max, though, I do want to take a moment to say hi to you. I haven't seen your name around, but hi. And OG Foundation providing us with some thoughts here. Bitcoin Cash has never stopped working as P2P Cash since it was created over 13 years ago. Yeah, forked out of Bitcoin. So pretty much the original Bitcoin code base, sticking with the original Bitcoin revolution, on-chain frictionless cash. Yeah, I still want to see cash be a big thing here. I think if we had stuck to cash as being a real narrative for Bitcoin, it could have been a lot further here when it came to the regulators. I think, Ethereum might not have even existed if some of its code had been included in Bitcoin early on. But Bitcoiners are just an interesting breed that do have a lot of their hands around communities and are able to influence narratives a certain way or other. And it's been interesting to watch at least. But whether it's right or wrong, it's just where we're at this point. I don't know where Bitcoin would be, but it has definitely slowed down quite a bit. I think that's what makes the maxis, the maximalists, quite upset is that they want everything else to be a scam, nothing else to exist with that it's only Bitcoin. But it's too late for everything else to die. Surely a lot of them do kind of get forgotten about, but every cycle just brings more and more coins and more things like NFTs that perhaps sap away value from Bitcoin that may have existed if Bitcoin had been a little bit more inclusive, as I think Satoshi wanted it to be in the beginning, in the first place. Just interesting stuff there. But anyway, Voyager. So Voyager was trying to be like a Coinbase. They even had their own debit card, for example, and unfortunately, it just ended up scenario where it started to become a problem where, as it says here on Cointelegraph, signs that Voyager and its clients were experiencing headwinds came after the lending platform entered. So this happened, was it just last week, into a $500 million loan agreement with big trading firm in crypto Alameda Research to cover losses from its exposure to crypto venture capital firm Three Arrows Capital. There it is again, Three Arrows Capital, just at the center of this destruction that we've seen. So yeah, them being offered an olive branch of $500 million from Alameda was seen as kind of a bad sign. And a day later, the platform lowered its daily withdrawal limit to $10,000. Then on July 1st, announced that it would suspend trading, deposits, and withdrawals and loyalty rewards distributions, just like we saw with Celsius. And so this has come to a head today as we've seen a bankruptcy, Chapter 11 bankruptcy filed in New York, in the Southern District, U.S. Bankruptcy Court, Southern District in New York. And so it's actually trying to help creditors according to all of this. So the proposed plan of this reorganization that will be taking place does seem like it could be, at least it's moved quicker than Celsius, for example. Although we'll have to see just how beneficial this will be, because from what I'm hearing right now, Voyager is on the hook for between $1 and $10 billion, which they may not have to make people whole, but over time they could make customers whole. So upon implementation of this reorganization plan that they're trying to do expeditiously, would resume account access to customers and return value to customers in the form of common shares in the newly organized company, proceeds from the $650 million, more than $650 million that apparently Three Arrows Capital owes Voyager, and in the form of both cash and Bitcoin. It would also grant Voyager tokens, so it kind of reminds me of Bitfinex tokens, to the people who might be due some of these funds. This is pending a reconciliation and fraud prevention process that has to take place with Metropolitan Commercial Bank, which is holding the USD funds for customers with Voyager. So hopefully all this does get worked out, and you can go to a website that has been set up for this Chapter 11 process. It's been set up with the claims agent Stretto. So you can check out cases.stretto.com/Voyager to see currently court documents and other information if you're due that money. But yeah, there's something weird happening here as well, because back in December 18th, 2019, Voyager had said that USD funds that were secured with Voyager and held at Metropolitan Bank were covered under the Federal Deposit Insurance Corporation. So they were covered under this $250,000 that is due to each account in the event that a bank fails here in the United States. So they wrote in this blog post, through our strategic relationships with our banking partners, all customers' USD held with Voyager is now FDIC insured. So that might make you feel a little bit more confident with parking USD at Voyager. That means that in the rare event your USD funds are compromised, rare event, it only took 3 years, is it? Not even, are compromised due to the company or our banking partner's failure, you are guaranteed a full reimbursement up to $250,000. We're excited to offer our customers an extra level of security so that they can feel more comfortable holding their USD with Voyager. So what is FDIC insurance? Is an independent agency of the U.S. government that protects customers against the loss of insured deposits from an FDIC insured bank or platform. FDIC insurance is backed by the full faith and credit of the United States government. If a failure were to occur and deposits were lost, the FDIC responds by repaying customers' lost funds up to, again, $250,000. Now, it looks like that might not be the case where those parked funds at Metropolitan Commercial Bank, those USD from Voyager, might be due to customers, especially if we go ahead and skip here to the bottom. So this was posted, I believe, today. So following that press release by Voyager that we looked at, this press release about their Chapter 11, it came out, in fact, from Metropolitan Commercial Bank that FDIC insurance does not protect against the failure of Voyager or any act or omission of Voyager or its employees, or the loss in value of cryptocurrency or other assets. So they're basically saying that Voyager is going to be kind of screwed here, since the FDIC is $250,000 per depositor at the bank, but that doesn't apply to Voyager, who is the depositor at the bank. So this does look like a little bit of a concern, and hopefully it doesn't play a bigger role in delaying the constitution of funds for users. But man, is this just hitting so many across the board. Another one I want to advise caution with that is being brought up right now is Gemini Earn. So Gemini is one of the big cryptocurrency exchanges and one of the only that are allowed to operate in New York City with the BIT license. So Gemini has their Earn, which allows users to get a yield on deposits of Gemini US dollar, but the main counterparty of Gemini US dollar is Genesis Trading. And so some are looking at this post by one of the heads of Genesis Trading, Michael Morrow, as a cause for concern, because why come out and be transparent, as we've seen others come out before having major issues, including Celsius and Voyager. So now really all eyes again. Anytime someone says anyone, it's like, be careful. Let me take my funds out before something goes wrong. So Michael Morrow didn't really say anything too concerning, except that they basically got bailed out. So check this out. As part of our goal in providing transparency to the market, I want to share the latest update at Genesis Trading. We previously stated in June that we mitigated our losses with respect to a large counterparty who failed to meet a margin call. Now that the BVI bankruptcy process has commenced, we can confirm that the counterparty was Three Arrows Capital. They had a way more than three arrows in their quiver. The loans to this counterparty had a weighted average margin requirement of over 80%. Once they were unable to meet the margin call requirements, we immediately sold collateral and hedged our downside. So they tried to do the right thing. Since then, we worked with DCG Co. to find the optimal strategy to further isolate the risk. DCG, Digital Currency Group, has assumed certain liabilities of Genesis related to the counterparty to ensure that we have the capital to operate and scale our business for the long term. In addition, we are pursuing all strategies to recover any potential residual loss. Genesis has a range of business lines, including trading, lending, derivatives, and custody services. We deploy a number of risk management strategies to ring fence our portfolio and utilize all capabilities to mitigate losses quickly and effectively. Since our founding in 2013, Genesis has successfully navigated periods of intense market volatility, although they've never seen some sort of contagion like what we've seen surely during this recent bear market collapse. I've never seen anything like that in my years following these markets. Looking ahead, we will continue to support the needs of our clients and counterparties as we enter the next phase of the industry's evolution. So the thing is, if we have another leg down here with Bitcoin, what other problems could be arising if you have parked funds at a middleman? I know I suffered a huge lesson here, and it should be a lesson to all. Like monkey see, monkey do shouldn't have to be the case where we all lose money before we learn that it's risky to park for some sort of yield. But that yield is damn attractive. Damn, it's attractive, right? For some, it could be $50 a week. For others, it could be thousands of bucks a week. Regardless, it's so tempting. It's so tempting that many are still willing to risk losing complete funds. So just be careful. That's why I bring up that information. Hopefully we've at least learned our lessons, and there have been lessons learned, I believe, like according to this post by High Paces on Reddit on ETH Finance again, just my favorite subreddit. Highly recommend you check that subreddit out. But he had this great viewpoint. I shared it on Twitter earlier. He said, stepping back from the micro short-term view of Celsius, Voyager, Three Arrows Capital, BlockFi issues, I am beginning to see it as an incredibly constructive moment for crypto. It proves that open source audible code beats out, it's better than black box mega corporations. Two, it proves that human greed will always exist, which demonstrates why we need to use code. Well, that's really what we're doing here with smart contracts. Why we need to use code to engineer out human emotion from our financial framework. Three, proves that centralized companies are always going to socialize risks and losses while pushing large profits to only a few. Yeah, we take a look at those disclaimers and we see that in the event that Celsius has any problems, they own all those funds. We are not due any of that. They don't have to give us jack shit. And socializing risks and losses, yeah, sorry guys, you all lose out, but at least you all lose out together. Four, shows why DeFi is better than CeFi. Yeah, they continued without a hitch for the most part. And five, it shows that CeFi was just a porting over of the TradFi model that failed us in 2008. Yes, it was trying to reconstruct Wall Street games that have failed us before, just under a new sandbox. I really think that time will look back on this 2022 crypto winter as a net positive for how decentralized, trustless finance is a net benefit for the individual investor. And that's what it's all about, my friends. So I will finish with our quote of the day, as we often do here on the show. It's not about having time, it's about making time. I think this is super important. I know I've had a lot of time in the past, thanks to crypto. It's been such a blessing to me, but I haven't made time for things that have been important in my life nearly enough. And so this really reminds me of the importance of actions over a certain period of time, valuable actions to take care of each other, to appreciate what we have, rather than chasing things that we don't need. And so much more. Anyway, I wonder. I hope that you takes away something. You also take away something from that quote. And I apologize for all my missteps. I didn't really sleep last night. I've been sleeping one night, not sleeping one night, and the nights that I do sleep, it's been really restless. As I'm still dealing with some personal stuff I've discussed in the past. But yeah, hopefully that's all getting worked out. I don't want to be taking sleeping pills or anything. I want to be clean, man. I want to be clean so I can provide you guys clean, good, honest, transparent news. And I hope you'll continue to support the show by showing up, by joining our Patreon, as you guys continue to do. Thank you so much to our Patreon supporters and all of you who show up, get those likes out here, and subscribe. I believe 30% of the viewers who are watching the show are not subscribed, so I encourage you to hit that subscribe. It goes a long way toward at least making me feel good, man, even though we're not making any bucks outside of those Patreon supporters and the occasional tip. But thank you for that. I sincerely thank you for what you have given me and continue to give me. Most importantly is your attention, your valuable time in this life. It means the world. Take care, everyone. Much love and stay cryptic. Peace.